Having run Acorn through recessions at the end of the 80s and early 90s, banking crisis in 2006, 2007, then to walk into global pandemic in February, March of this year, it's just completely uncharted territory. I expected things to be very, very, very bleak, and I saw, the potential for a real shutdown of all markets, and so I'm relieved by the fact that we saw Q2 of this year being a kind of lockdown and a protection phase, and a protection phase for the right reasons, for health reasons. Above all else, forget the money. The one priority for us as a business, for me as a family man, is the protection of my people and my family. So as we came out of lockdown, it was good to see the British government, a Tory government, throw the kitchen sink at the financials of this, and they've still got a long way to go. But I was quite shocked to see how quickly normality returned in the property market, and actually a property market that's now being fueled by further government support, the zero stamp duty rate up to 500,000. But I think there's been a reminder this year of the one real solid investment that everybody makes is in their own home. So that early part of the year, everybody had a look at their own home. Everybody had a period of reflection. A lot of people were all back living under one roof. And I think everybody started to look and think, well, is this where we want to live for the rest of our lives? Is this where we want to spend our time? And that, combined with very, very low interest rates, tremendous government support, and rather uniquely a period of time in which people have not had the ability to spend like they would have done normally, has created a perfect marketplace for the residential property market as it stands at the moment. We've got to have half an eye on where things go on unemployment, but let's not get too scared. It's about the net loss of jobs. Yes, there will be some unemployment. Yes, there will be a hike in redundancies, but what I'm beginning to see is that those people will be re-employed. Not all, and there is going to be a spike in unemployment, but generally speaking, with the support that's coming into the economy, with the low interest rates, and as I've said, the lower cost of moving, I think the property market can look forward to, at the very least, a very, very stable period at the back end of this year and the beginning of next year, even if the spikes in activity that are occurring right now don't continue quite as far into the future as perhaps they could have done. When we returned to work in the middle of May, pretty much immediately, and this is before the stamp duty reduction, people had clearly reviewed their property requirements. They've reviewed the house, the flat they were living in, and wanted to make a change. So the introduction of a 0% up to 500,000 stamp duty only served to fuel that market. It's put thousands of pounds back in first-time buyers' pockets in particular. It's also meant that even investors in the market now are only paying 3% effectively up to £500,000 because they've got a saving on the core rate of stamp duty. So that's again introduced investor interest into the sector. And when you think, looking at building societies and banks, there's very little return on cash, an awful lot of families have thought, let's get back into the property market. A lot of parents are budding up with children to, now's the time to make the move. So I think it's all the ingredients have come together at one time, and in its own effect, the UK property industry will supply more jobs, will actually take up some of the slack. It will give confidence to the development sector, which again will drive jobs. So in our part of the economy, the government are beginning to fulfil and have a strategy that is getting played out and is working. And I think that's good for the homeowner. I think that's going to be good for the homeowner. It's going to be good for the value of your home. And at the end of the day, your home's your home, but it's nice also when you look every 2 or 3 years at what it's worth. It's nice that it's, for a lot of people, it's almost like their pension. It's the house they're going to sell when they move perhaps down market in the latter years of their life. For your children, you want them to move into a property that's going to be a nest egg for the future. So the steps that are being taken at the moment, the economic steps that the British government are bringing to play are working within the property market, no question. We have a full service financial services business, and on that side of our company, we've been flat out. It's not just house moves, it's people reviewing their financial arrangements, and with the introduction of really competitive long-term fixed rates, pretty much everybody that's got a mortgage is going to be looking at the next 1, 2, 3, 4 years. Do they come off of a fixed rate deal? Do they go into a longer fixed rate? Views of variable rates, but money is cheap, and you should look at your mortgage statement and make a decision as to whether you are getting the best value and whether now's the time to review it. And we've been we're very well placed to give that advice to existing homeowners.